Okay, so here's a quick update for the week, and I'm going to cover the euro and the pound. Those are the ones I've been focusing on. Excuse me if my voice is a little hoarse, but I've got a bit of flu. Hopefully it's not the dreaded C, but I don't think so. We've got the euro and the pound here on the chart. I'm going to have a look at a couple of other things as well while we're here, and also look at the economic news coming out this week. There's not a lot, but there is some interesting stuff which we need to take heed of as the week progresses. So let's start with the euro. If you remember last week in my Twitter updates, I warned of a buying opportunity at the bottom here, where you can see these two reversal patterns. The first buying opportunity, of course, was here at this level at about 1.035, which we just about touched there, and then again a little bit later on we touched it again and formed a little double bottom over here. If I expand this, you can see I've already put the levels on that I need to look at in the week ahead. Remember, this is still a bearish market. We're still very much in a bear market, even though stocks did rally. The dollar dropped off a bit towards the end of the week, and the other currencies also rallied, including the euro, the pound, the Australian dollar, and the Swiss franc. The euro has bounced off this level. We're in a bear market. If you are long, which I am, you should be holding on to these positions, probably for a move back up to one of these levels above here, where you can see I've got these lines in. This is a daily chart trend line, this purple one coming down. So that'll be a pretty strong level if and when we reach there. And then we've got this zone that I've drawn in here in this yellow and yellow-green, which is the next resistance level for any move up, which is the area in which we'll be looking to sell. So that's around 1.4046 to 1.049, call it 1.05, that sort of level there. You can see it was a very strong previous support. That was that area that we traded in for such a long time, and we were hoping for a sort of a U-shaped bottom there, which never occurred. And there were no opportunities really to buy or to sell in this range, which lasted a long time. Right now at the bottom, after having bounced off this previous support line, which is a very, very long-term low. I'll illustrate that to you by just putting on a weekly chart and expanding that a little bit. And you can see it's a bit confused with all these lines that I've drawn in on the hourly chart, but you can see this is a long-term low that goes back to 2017, 2015, and perhaps even beyond that, in fact, to when the euro originally started. Even then, it was an area of support and resistance. So it's a very, very significant level. Doesn't mean it's going to hold. You can see the euro has been below that. It's been below 1, started off like that in the early days. And ever since then, we've been below 1 euro to the pound. I mean, above it, rather. But we've come back down to that level right now. And I suppose we should see a little bounce off there at least. But bear in mind, we're in a strong bear market. We've got all sorts of economic problems coming out of various parts of the world. We've got war going on at the moment in Ukraine. And we've got the prospect, and this is really important, the prospect of further increase in interest rates in the US over the balance of this year to try and stem the inflation problem. So all of that points to further weakness in the euro, the pound, the Australian dollar, the Swiss franc, the Japanese yen, and the list goes on. So even though we're long right now, we're not looking to hold that long for very long, excuse the pun. We'll be looking to actually sell into any upticks. So back to the hourly chart. And so those upticks, you can see the lines I put in there. All of these lines represent resistance areas that we'll be looking at. The strongest one is in this greenish, sort of vomit green yellow colored area. And this is where we'll be looking to sell. Now, when I say looking to sell, we'll be looking for overbought conditions on the hourly chart. We'll be looking for reversal candles. We'll be looking for a move into these levels. We're not going to get up to these levels, unless we can break through this most recent high resistance level that we're just below right now. So if we do manage to get up through there, this is the area that we'll be looking at during this week to sell into. So that's the euro. Pretty important short-term bounce and a longer-term bear market still on the euro unless something changes. Now the pound is pretty similar. The pound's also very oversold. It's been at these lows. It's not quite an all-time low. If we go to the weekly chart, just to do a similar comparison to the euro, we're down at this sort of level here. It is a support level. We broke through that briefly in 2020, but and there it is again. It's a bit of a support level there. And generally the pound is at the bottom of its long-term range. So once again, we're in a bearish market. Doesn't mean it can't continue down, but for the moment we'll be looking for a short-term bounce back up again to one of the levels that I've illustrated on the hourly chart, and we'll be looking to sell into those levels. It's very important to go with the trend in these strong downturns, even though it looks and it screams out to one that we're oversold, it's come way too low, we're at long-term bottoms. We don't want to be betting on the fact that we will hold above those levels, because we may not. The market can do anything seemingly irrational, and as I've often said and many wise people have repeated, the market can remain irrational for much longer than you can remain solvent. So we don't want to be caught on the wrong side of a further move down. But for the moment, I'm long the pound as well. There's a positive note to this in that we have broken above this resistance level here, which is a resistance from last week. And we hesitated on Friday afternoon just below there, and then eventually broke up higher, and we're there at this price, still holding above the resistance level into the weekend. It's now Sunday, so markets will be opening in a number of hours' time. But we have approached this whole plethora of resistance levels. We're at the first one already. You can see it was very strong previous support there. We're right up against that at the moment. Who knows what will happen on the weekend. Hopefully we're not going to get a gap down, but I expect some more hesitation there, and then perhaps a rally up to this trend line and this resistance line here, which is formed by the top of this little range gadget that I put in. I've got two. I've got one up there, one here. So all of these levels where you see horizontal lines and colored shaded areas are potential resistance areas in which there may arise opportunities to sell the pound. So that's that now. So that's a strategy similar on the euro and the pound. The pound's looking a bit more bullish than the euro, and perhaps not as affected by the problems in Ukraine as the euro is. All right, quickly going from there, let's have a look at the Australian dollar. Really, it's a tricky one. You know, I haven't drawn any, I'm not planning on really trading this currency during the coming week. We've broken marginally above this support, which is now resistance. If I draw a horizontal line in there, over here, so that was previous support, which then became resistance, and we've broken above there. So if anything, a bit bullish, but we're still in a very strong downtrend overall on the Australian dollar. And actually historically, the Australian dollar is more happy in the 0.6 to 0.7 range than it is above there. So we might fall back into this range below 0.7 and faff around in here and perhaps even drop a bit lower. So nothing really all that appealing on the Aussie dollar. And then when it comes to the Swiss franc, well, again, you know, we've broken above the parity level, one Swiss franc to $1 US. we've been in this very, very protracted, I mean, it's quite unbelievable. If you look at the hourly chart over a period of time, it's been a non-stop increase. One or two blips downwards, but nothing significant at all. And we're above one now, and we're holding above there. So do we want to be long or short on this? Well, I would say probably we're due for a correction and that the Swiss will drop back down a bit. But we've got this major psychological level at 1 to 1. And there's a very good chance that we'll hold above that. So what I'm thinking is rather leave this one alone as well. And any dips down to some of these support levels, perhaps 0.988, I don't know, but maybe even 0.97, those would be opportunities to buy the dollar against the Swiss franc. So that's that one. Let's move this back to the pound. So these are the two that I'll be keeping most of my attention focused upon, the euro and the pound. So I'm long both of these, as I said, looking to get out of these long positions should we rally up to some of these resistance levels. And I'll be watching carefully for signs of reversal to trade short again on the euro and the pound, bearing in mind, as I said, the geopolitical problems going on and also economic woes, particularly the well, I was going to say possibility, but it's more like probability of further rate increases in the US. And as with any currency, if the interest rate, the lending rate, the borrowing rate, the rate you get in the banks for that currency goes up, that currency generally rallies as well because people start moving into carry trades, moving markets, moving their currency into markets where they get a higher interest rate and therefore a higher return on their holdings. So that's that. Now, a couple of other things I've been looking at over the last while, and I've commented on them on Twitter, just out of interest. Two things. One is the NASDAQ and the S&P. Well, let's just have a look at the NASDAQ. This is the NASDAQ. And I'm just going to switch this over to a weekly chart. So this is the NASDAQ 100 tech stocks in the US. And I've still got the lines drawn on here on the weekly chart from, I don't know, several weeks ago, which I did post on Twitter as well, saying this would be the buy region over here at this first 50% Fibonacci retracement level from this previous move up. From over here, we had a sharp drop during that time in 2020, moved all the way back up here, and we've dropped back down. We've lost half of the gains since 2020. So 2 years worth of gains, half of it's been erased just like that in a number of weeks. And the same reasons for the moves in the currencies are affecting the moves in the stock market. But I think that somewhere between where we are now at about at about 12,000 down to potentially 11,000, somewhere over there where this cursor is right now, be excellent buying places to buy NASDAQ. I'm going to be looking to buy NASDAQ personally for a long-term hold to move back up to the previous highs over here. So that would be about a 12 to 16, that'd be a good 30-40% increase in the NASDAQ. And but that would be a long-term trade just to buy and hold. Stock markets, even though they do correct quite violently sometimes, always eventually end up going higher, going back up to the original highs and making new highs. So that's the nature of stock markets. You've just got to time your purchases really well. And this is a good time to be buying NASDAQ or any shares within the NASDAQ that you like, any of the tech stocks, things like Apple and Twitter and Microsoft and Amazon and things like that. But it's much more difficult to pick individual stocks on the NASDAQ because of trends in social media, internet usage, and online habits of people. New tech companies start up all the time. So picking individual tech stocks is pretty tricky. Can be done, of course, if you know what you're doing. But if you want to play this safe, rather go for the index and somewhere around 12,000 down to about 11,000. That's the buying region for a long-term move up. The same thing really goes for the S&P. We haven't quite reached the levels that I'm interested in. They're a bit further down. So I'll be looking to buy S&P if we get into this zone here. And you can see it's between 3,400 and 3,600, somewhere in that range. And I'm not going to do anything until we may never even get there, of course. But if we do, this will be the buying range for the NASDAQ. And then the other one that I was looking at was crypto, Bitcoin, for those of you who like trading Bitcoin. And some of you who have been burnt by it, perhaps will be looking for an opportunity to get back into the market. You can see we've dropped back down to this long-term trend line after some serious volatility, and moves up to, I don't know, 70,000 or so. We're back down to below 30,000. We could drop down to this previous resistance level. It's a very good chance, but we are on this trend line. We've dropped quite a long way. Bitcoin's not nearly as secure as buying the NASDAQ, of course. But if I draw a horizontal line in there, over here at that previous high, that would be an excellent place to buy Bitcoin and any other cryptocurrencies that are strongly aligned with Bitcoin. This one being the biggest, obviously, and the most influential in this market. So, yeah, I think you could average in by a little bit around about this trend line. I think we'll retest this trend line. We've bounced back up, but just check this out. If I draw another horizontal line in here at those lows, you can see we broke beneath those lows and we're still holding beneath them, which is pretty important because that means there's still, let me just readjust that, there's still some weakness in Bitcoin, having broken this very important previous low, bounced back off the trend line, but we didn't manage to close back above these lows. So I think we're going to retest this trend line, potentially even test this previous level of resistance, which is now support, and that's at about 19,000. Let's be precise here, 19,678.22. So 19,678, 19,680, 19,700. That's the area to look into buying Bitcoin if you're into trading cryptos, which I'm really not, but I might have a bash at it, and that would be my one of my I've traded cryptos once or twice, but not very often, hardly ever. But this would be an opportunity to have a go at it. So that's that. So that's the weekly update. So remember what I said on the pound and the euro. And I'm just going to switch this back to the pound hourly chart. So that's the pound and the euro. So I'm long on both of these, looking to exit these at some of these resistance levels. I'm watching very carefully for reversal patterns on the hourly chart and looking to sell with the aim of moving back down to these lows that we formed during last week. All right, I think that really covers everything. So good luck with your trading, and please follow me on Twitter if you're interested in seeing this information coming out in more detailed form on a more regular basis. And I often post updates during the day as to what trades I'm taking. Not all of them, but quite a lot of them, and you can watch along with the others as we continue to trade. Now, I only started this Twitter account a little while back, but I've got just broken 200. Doesn't sound much, I know, compared to some who have got millions and millions, but 200 followers, and I'm getting a lot of views on my Twitter feed, a lot of clicks and views of the information that I put up there. So people are finding it useful. All right, well, have a fantastic week. Hope you've survived the Holocaust that's been going on in the last period with the volatility. For example, volatility, I can hardly even say it. It's been so traumatic. I managed to do quite well, but I can see there was a lot of danger around. This was the CPI, for example. We moved 100 pips up and down in a couple of hours in that period. So if you'd been trading a range breakout, you would have been stopped out on both sides of this move, and eventually it resumed its move down. Same with the euro. Okay, speak soon. Follow me on Twitter. You'll get lots of info there.